Hi traders, compliment of the season. Uh, we are reaching the end of the year. So in this today's video, I wouldn't want to do any trade. I'll do some trade, but then I want to talk much more about the market and its behavior itself. So right here in front of us, we have a ranging market. We have a ranging market, a very wide range. So in this market like this, when you see a market like this, you can see it has been ranging down from here. Yeah, it was trending down. Now it's ranging. Now when it's ranging like this, it may go up or down. We do not know. So when we have this kind of range, what we do is to look at extreme levels. We look at what? Extreme levels. So what are extreme levels? Extreme level are places in your chart that are visibly clear, where the reversal of price occurs. There are places in the chart that are visibly clear where a reversal had occurred. So what is an extreme level in this chart? You see, it was downtrend and it began ranging from here. And one of those extreme level is this round number. Let me show you. This is the round number of 0.1, sorry, 1.17700, yeah, 1.1770, okay, 1.17800. Yes, this is an extreme zone. Why is it an extreme zone? You see how price came here and reacted. It came here, it didn't really react, but it reacted here. Now this is a round number and it is also a support and a resistance zone. So when you have something like this, it is a confluence. Why is it a confluence? You see how price reversed here. This normally this is a support. This is a resistance for price, and at the top of it, I will make this one white so we know that in this level there is a resistance. This is the white line, and at the top of that resistance there is a round number which is the blue line. So here this number, this place is a really good um area of reversal. Why is it a good area of reversal? Because it is a ranging market. Now you come to the down part, the down part of this, you get another zone, and here you can see this is another area 1.17700. You can see it's 1.17700. So the first, yeah, this is it. Now what happened here again? You can see how price came down. When price came down, price started reversing from here. It came here again and it did a fake breakout and it reversed. Now it came here again. What happened when it came here? You can see it made a double bottom. A double bottom. What is a double bottom? A double bottom is a reversal pattern. It's a reversal pattern whereby the price comes down like this. It makes the first low, it goes up, it makes this low here that is higher than the first low it made, and then it went up straight. So this is the first bottom and this is the second bottom. This is what we call the double bottom. You find it mostly in the ranging market and it brings strong reversal. And the opposite of the double bottom is the double top. I think someone must have spotted the double top already. The double bottom occurs in a and it shows a support. The double top is the opposite where it shows a resistance. This is the first top. It came down, it went up and made a second top lower than the first top and it fell down. Now I want to show you something on how to trade these double tops and double bottom. Now, to trade the double top, for instance, this here is called the neckline. This place where the price went up, it came down and went up again. Here is called the neckline. So when you want to trade the double bottom, you will now look at this neckline here. You look at this neckline here. When you take this neckline, I didn't get it correctly. Okay, perfect. Now when you take this neckline here, you see it here, this neckline, what you now do after this upward movement, after this kind of movement, when you see a breakout of this with this candle, you have to wait for a pullback back to the double bottom, sorry, back to the neckline. The neckline constitute the neckline brings about a pullback to itself, and then the trade to the downward direction continues. Now, this is the first pullback. It wasn't clear, but here is the second pullback you can enter in the trade. Now, to prove how to trade the double bottom and double top, you can see this is the double top. Sorry, this is the double bottom here. So we have up, we have a neckline here, we have down, and we have up, right? Look at it, the W pattern. Here is the W pattern. Here is the M pattern, right? Now let us put our neckline for this double bottom now, so that we see how we can draw it. You have, this is the whole area of the neckline. You can see this candlestick here and here, and this wick here. This is the neckline because this is a candle that broke the neckline. Now let's go back to the red chart and see what's going on there. Oh, okay. You can see what is going on there. When the candlestick came back there, you see what I'm saying? This is the neckline. You see it here? This is the neckline. When it came back there, what happened? It went up. But no, we can still have another chance because this is the first time it's touching the neckline. I want it to come here, and I want it to give us good a good confirmation, a good confirmation, and then we enter for 3 to 5 minutes. Now at this point, if since let's say I'm the trader, I want to trade this, what I'll do is to be patient at this point and wait. I already have my setup. I'm not trying to prove anything. I will just wait for to get the confirmation pattern. Now, what if I don't get the confirmation pattern? I won't panic because this is part of trading. You can wait as much as you want. It doesn't mean that your waiting will justify the pattern. But there is something that I know. I have a neckline here, and I also have a round number. This is the round number 1.77. Yeah, this is the round number, and I'm going to mark it white. Now, why is this important to me? Why is the round number important? The round number is important because of confluence. There is when there is this round number, there is an EMA, there is a Bollinger Band, all in one place. There is a neckline, there is a support, and there is a demand. It makes the trade becomes a high probability trading setup. You can see how you can see how it reacted now. Can you see how the neckline is reacting to the price is reacting to this neckline of the double bottom, just like how this price reacted to this neckline of the double top. So this is what is happening here. It's reacting to the neckline. Although the volume in the market is really low, you can see how tired looking the candles are. They are moving slowly and sluggishly. But I just need you to understand the effect of these patterns. Now, the neckline is telling us something that strong buyers are here. And this neckline is telling us something that strong sellers are here. So what is happening now is that the whole area of the neckline has not been touched. So at this point, we are looking for what signal to go into this trade to do a buy option. But then I still need you to remember that even if there is a neckline here, even if there is a strong level here, the trend might be changing to a downtrend. It might be changing to a downtrend. So what I'm going to do, I'm going to use a trend line here to show you how the trend is now making lower highs and the trend is now making lower lows. Oh, sorry. The trend makes lower high and lower lows, right? So with that being said, I will put this here. Now we are having our lower highs and lower lows. Now this is the more reason why the market should reverse. Why? Because there is a confluence. For a trend line, the market comes here and reverse, it comes here and reverse, it comes down and goes up, it comes down here and goes up, it comes down here and goes up. Now there is a good reason for the market to reverse here. Why? Because it is in confluence with this upward movement that we are expecting based on this trend line, is in confluence with the neckline that we are also expecting to bring in a green candle, but yet nothing is happening. Can you see how the trading rules can change, and then you need to now start applying your common sense? It is established. For a beginner trader, you must have taken a call trade and you must have lost, right? But it has been established that when the price comes down here, it's supposed to go up. Okay, now it's going up. Let's see how it ends up, because this is what we've been saying: lower lows and lower highs. Now it's time to make a new lower low, and at the same time, it is time for this neckline to do what it is meant to do. So this is what trading is for us. So let us wait and see what is happening here. I need to be sure, because if you look at this downtrend, is also it's also bringing a new pressure. For those of you who have been following me, when something is supposed to happen yet it's failing to happen, we call that failure. And what does failure does? Failure shows direction. Failure, it shows direction. So in a case like this, when I'm saying that this demand zone, this neckline, this trend line support is not bringing what I want, I will be preparing to do the failure trading strategy. But first, for me to go on, for me to go on with this failure trading strategy, I need the price to leave this zone, because buyers can come in at any time. Now you can see buyers are here. Now, there is also some other confluence we can add to make sure our trade goes on well. So let me try and add the volume indicator. Like I said, I don't want to make any trades today. I just want to do a little bit of teaching. Now you can see Now you can see why the market wasn't moving. The volume was not really strong here. You can see they were coming down. So this is the first time we are seeing the buyers coming in. This is the first time. So what are we expecting? We're expecting the buyers to come back to this place. So you see how you can predict price movement time. The market is not really good. So I can come here and do a trade. Like I said, I don't want to trade. I want to save my Christmas money. Yeah, so from here now you can do a trade. I can even go now to demo. Yes, I will take it to demo. You can do a trade here for 3 to 4 minutes, and then let's see. Oh no, I'm not doing this. So why is this happening? You can see how this candlestick came up and the volume is not even matching. How can this weak candlestick produce a high volume and this big candlestick is not even doing anything? Is not producing anything. So it's really not making any sense. Assuming this candlestick came with a high volume, then I can think of going up. But for now, I will be working with normal price action. If I want to go with normal price action, I think let's say I want to do my normal trading. I will do something like, let's see. No, it's not even happening. So this candlestick may be going up. Okay, it's maybe going up to this place, but I'm not sure about it. But I have to take it. Why do I have to take it? Like I said, if you are a beginner trader, follow the rules, because there is something about portfolio management and high probability trading setup. Now I consider this a very good trade setup, a high probability trading setup, because apart from the volume that I've just spotted out, we had everything in our we had everything in our favor. Let me remove the volume so that I okay. So apart from the volume that I just put it, we had everything in our favor, and then that's we had the double bottom and we had the neckline which should push price up, and at the same time we have a ranging market. And you know what happens in a ranging market is that price moves from up to down, right? Now when price was moving from up to down, it got to a point it was moving downwards much more than it was moving upward. And because of that, we found out that a trend line has been formed. Now, when we drew that trend line, it also coincided with the neckline of the double bottom. What's going on here? It also coincided with the neckline of this double bottom. So what do? See this as a confluence. You remember what a confluence is? It is when there are levels, there are evidences that backs up the strength of a level. Round number, Bollinger Band, EMAs. For this, I am not using the Bollinger Band and EMA, but when you are stacking up these levels at one point and they are coming together at one point, and you already have a strategy in mind, it gives it a high probability it makes it a high probability trading setup to do. So this is what we have here. Now, when you get something like this as a new trader, you take it. Now, you might lose. Yes, you might lose the trade. Fine. But do you know now that if you're going to trade this same setup 10 times, you're going to lose 3 or 4. Then the remaining 6 or 7 trade, you've won them. Yes, and you will make profit in as much as if you lose your first trade or you lose your second trade, it doesn't derail you from the strategy. This is where emotional control comes in. Because as we are speaking now, you can see this candle can just come down and break this level and I will lose the trade. But when something like this happens, it should not shake you and you think, oh, my strategy is bad. No, the reason you lost is no longer because of you. The reason you lost is because this is how trading is. You can't win even if the strategy is perfect, you can't win every trade. Never. So what you have to do at a point where you're losing in a good setup is to arrange yourself back and go for the next. If you plan to take 2 trades, go for the next. If you lose the two, always remember that trading is a long-term game. So if you plan to take 20 trade on that strategy, then you know that within this 20 trade, I can win 13 and I'll lose 7. And I'll make money at the end of the day, not at that single trade, at the end of the series that I have planned. This is how you trade. Well, I am making a new version of the ebook. In case you don't know, I'm still on it now. You can see it. I am making a new version of it because the older version, yeah, here is it, and here are some of the things you will be getting. The older version of it, I saw so many mistakes, so I thought I should make the new version. And in this version, I'm putting out everything that I know will help you to become a good trader. You can see how I explained everything here. Everything you need to become a good trader, you have it here. So, and this was the older version, which, like I said, I found so many typographical errors on it, and it was not really good that way. So let's go back to the chart. You can see what I was talking about. So for what we can see now is a kind of a fake breakout is happening here, or if it's not a fake breakout, it's just a breakout of this neckline, which I'm sure because this candlestick is strong, a pull back to the neckline and a continuation upward. So I guess you understand the way you should trade and the mindset you should adopt towards trading. So until next time, I'll be leaving you here. Take care of yourself. If you want to get the ebook, you can get it. The link to my WhatsApp would be left in the description of this video. So bye bye until next time. Happy Christmas, happy end of year. Bye.